right. Good morning, everyone calling in from Asia, and good afternoon and good evening for those calling in from a different time zone. And thank you for attending the HashKey Capital call on crypto regulation in the US and Asia. We're just going to give a minute for people to settle in, and then we'll start in a minute. All right, let's get started. Again, good morning, everybody, for those who are joining us from Asia, and good afternoon, good evening for those joining from different time zone. My name is Michael Chen. I am Director of Business Development at HashKey Capital, and I am the host today for our HashKey Capital call, crypto regulation in the US and Asia. And I am delighted to have two esteemed panelists, Michelle and Anna, joining me today. And before I kick off, just two very quick housekeeping items. Just 20 seconds on who we are. HashKey Capital, we are part of HashKey Group. And HashKey Capital is an institutional asset manager dedicated exclusively in investing in blockchain and crypto companies, as well as digital assets. And we've been in this space since 2015. Getting that a little bit of marketing out of the way. Second thing I just want to say, again, today's discussion and presentation is for illustration and discussion purpose only, and is not intended to be, nor should it be construed as financial, legal, tax, or investment advice. And obviously should not be construed as legal advice for the obvious reason. So then we'll start. Very delighted, like I said, to welcome Michelle and Anna as our experts in the respective regions to talk about today's topic. Again, I think regulation, crypto, it's almost like you can, talk about crypto without mentioning, what's going on with regulation. So I think I'll start with maybe having our guests just give a couple of minutes introduction of who they are, who their company and firm do in this space, and more importantly for the audience, how did you get into crypto? So maybe I'll start with Anna and then go to Michelle. Anna, go ahead. Yeah.
Okay. Thanks, Michael, for having me. Hi, everyone. Pleasant to be here. My name is Anna. I look after the legal team in HashKey. I joined HashKey in 2018. Prior to joining HashKey, I had worked with Tencent for a few years as an M&A in-house legal counsel. And prior to that, I was with an US-based international law firm, mainly engaged in Hong Kong and overseas capital market related. HashKey Group is an end-to-end crypto financial services group in Asia. Geographically speaking, we have our headquarters in Hong Kong, and we have operations and businesses in Japan and Singapore. In terms of the business we are doing, we provide a wide range of services, including a crypto exchange, a brokerage platform, institutional grade custody services, crypto staking services, and crypto fund investment, that is the HashKey Capital. We aim to provide a complete ecosystem across the entire crypto landscape and deliver security and performance to professional investors who intend to widen their exposure to digital assets. Speaking of the opportunity to get into crypto, I think it was in 2016. At that time, a friend showed me how to transfer ETH from another, and he transferred a few ETHs to me. At that time, ETH was just around like US dollar, like $8. So in
Wow.
I'm regret that I didn't purchase more, you know. So in early 2018, ETH reached nearly, I think, 1,400, which increased almost like 200 times within 2 years. So this is kind of new class of asset, and it's very attractive. I believe that many people doubt on that, maybe because lack of knowledge, it's easily to lost, and maybe lack of regulation. But I thought it was a promising direction. And I think the truth is that crypto, like other technological achievement, is not inherently good or bad. The most important thing is that you need to better understand this new class assets so that you form your own opinion and make investment decisions. Thank you, Michael.
Thanks, Anna. Wow. I mean, if you had more ETH back then, you know, maybe we don't have even to do this call today. Kidding aside, Michelle, over to you. Tell us a little bit, the audience, about yourself, your company, and how did you get into digital assets, crypto business arena? Yeah.
Sure. Thank you, Michael, and thanks for inviting me to speak here today. It's been lovely, you know, meeting and learning both from you and Anna in our short time that we've known each other, and it's a privilege to be speaking to all of our attendees. I'm Michelle Gitlitz. I am the General Counsel of Flexa Network, Inc. We are the global leader in pure digital payments. We offer the fastest, most fraud-proof payments network in the world. We offer our services to merchants who want to be able to facilitate their customers spending cryptocurrency at their stores or online, and either receiving cryptocurrency as the merchant, or receiving fiat currency, whether that be US dollar or some other currency, depending on the country in which the merchant operates. Our network supports 99 digital assets, and our goal is to support the growth of digital asset payments and reduce friction in the industry and reduce costs to merchants in their transactions. Credit card fees, things like that, are very, very high. The payment systems have a lot of pain points and a lot of fraud and a lot of chargebacks, and we're solving those problems. How I got into crypto was a little bit of an accident, but a lot of on purpose, I would say. I went to a party in 2015, and people were talking about blockchain, Ethereum, and Bitcoin. And I say those three words because they never said crypto. Crypto was a word I learned about later. And I had never heard of blockchain or Ethereum or Bitcoin or mining. And I listened to these primarily hedge fund and second managers and secondary market traders who were so passionate about this new technology and this new means of exchange and this new way that, as they described at the time, was going to disintermediate the financial services industry and cause a revolution in the way that we think about money. And I left that party finding myself very curious as to what this was. And the more I read, the more interested I became. And I spent a lot of time at meetups in Brooklyn and in warehouses and lots of different places, learning from lots of people in the industry who were just very generous with their time. I have no computer science background, no coding background. I come from a traditional financial services background, but it was really just interest. As long as you had interest, people were really happy to explain it to you. And I just fell in love with the industry. And I was in private practice at some large law firms for a number of years. And in October 2021, I went in-house to Flexa, which had been one of my long-term clients.
Great, great. I think both actually, and of you, Anna and Michelle, enter the industry. So actually, not now. It's been more than a few years. So that's so I'm sure you've seen some of the evolutions and come and goes in the industry as well. So yeah. So and then thank you very much for that. And just a word to the audience, to attendees. Just again, given the experience last time where the panelists just have a lot of just good stuff to say. I don't think we'll have a lot of time for a proper Q&A session today. That being said, during this session, while listening, if any of the attendees have questions about crypto legal regulation, I suggest maybe you can shoot me a quick email. And I'm just gonna put up my email on the screens for those who can see. So it's michael.chen@hashkey.com. So maybe that's easiest. If any of you during this session, feel free to shoot me a quick email and relay the question to me, and I will try to squeeze in and ask our guest. But of course, happy to address any questions after the call separately as well. So just going to put up again my email, michael.chen. That's Chen with an E like Eric at hashkey.com for those who want to send me a quick questions. So let me go to the first questions that I have for the panelists. So I think, again, today's topic is crypto regulation, in the US and in Asia. I think the first thing that I want to understand is, who are the regulators, right? That regulate what we define as cryptocurrency or digital assets. Again, even the definition of crypto might differ as well, right? I think my definition probably just be, who is regulating the buy, sell, ownership, or transaction using digital assets, or what do we call as crypto. So maybe again, I'll start with Anna again. Again, I think Asia is a big place. When we see in Asia, I think what I want Anna focus on maybe just sort of two places in Asia, namely Hong Kong and Singapore today for brevity. So maybe Anna, the first question to you is, maybe have the audience understand, when it comes to crypto, who are the regulators in Hong Kong and Singapore, respectively, for all things crypto and digital assets?
Thanks, Michael. I think before going to Hong Kong and Singapore, I can maybe just give a little introduction of the whole Asian market. So I think in the past few years, cryptocurrencies in Asia experienced rapid growth. So regulators inevitably had to start paying attention to this industry, primarily due to the increasing number of companies offering crypto-related services. I think the overall perception is that most Asian countries recognize the benefit of cryptocurrency adoptions, like low transaction cost, particularly for remittances. However, they are concerned about the implication of cryptocurrency in terms of money laundering and terrorism financing, and demand more rigid rules to protect customers from crypto-related services. Currently, I think crypto laws and regulations are inconsistent in Asian countries. The regulatory framework is varied across the board. And as you mentioned, we can't speak of all the jurisdictions in Asia because we have too much to say and too less time. So I will focus on Hong Kong and Singapore in this call. In Hong Kong, this is spread between a number of different bureaus, depending on what's being regulated. First, I would say the Hong Kong Monetary Authority, which is Hong Kong, HKMA, we call it. It is the city's central bank, determines whether or not the digital asset is considered as money. And that's why it has jurisdiction over stable coin. Also, it regulates the industry from the perspective of promoting the stability and integrity of the financial system. Also, there is the Securities and Futures Commission, which is the very famous SFC. So SFC is Hong Kong's market regulator. It regulates those virtual assets that are securities and future contracts, which with the purpose of protecting investors' rights and interests. And furthermore, at a higher level, the industry is regulated by the Financial Services and the Treasury Bureau, which is FSTB. It is the Hong Kong's policy bureau. It is developing and executing government policy on finance and treasury and setting out more generic rules in this industry. That's for Hong Kong. I think Singapore, in contrast, has created a separate framework under the Monetary Authority of Singapore. MAS is a hybrid of central bank and financial regulator. It specifically addresses all the licensing framework and licensing requirements of companies that want to set up a business involving virtual assets. Yeah, I think I will just stop it here, Michael.
Yeah, no, a lot of good acronyms. I think large number of our audience, I think are probably based in Asia. So I think they probably have some level of familiarity with, the acronyms of MAS or SFC. So those are good to know. Michelle, over to you. Obviously, US has always been on the forefront of innovations and regulations when it comes to cryptocurrency and digital assets. I must say, I think a lot of countries outside of the US, namely Europe and Asia, are probably looking to the US to see, is there in the playbook, when it comes to regulatory regime. So I think I would love to know, I'm sure the audience does as well, who are the regulators, in the US when it comes to, digital asset cryptocurrency, and that buzzword of interagency collaboration probably used a lot, both in FBI movies and also in cryptocurrency. So help the audience understand who are the actors, actress in this movie.
It's a great question. I usually like to refer to it as our alphabet soup of regulators. We have a lot of different state and federal regulators who all want to be part of enforcing or enacting laws that apply to crypto. In the US, we have the federal regime, to which every company and every citizen is subject to. And then we have the state regime. So if you live in New York, your laws related to crypto may be different than the laws of someone who lives in or operates in Arizona. So on the federal regime, we have the Securities and Exchange Commission, the SEC, we have the Commodities Futures and Trading Commission, the CFTC, we have the Office of the Controller of the Currency, the OCC, we have the Financial Crimes Enforcement Network, we have the IRS, who wants to make sure you pay your taxes on your crypto transactions. And before I go further, the SEC is looking at regulating securities and those issues that surround tokens they view to be as securities, which is basically, they've come out and said multiple times, we think most cryptocurrency tokens are securities. We have the CFTC, which generally regulates certain types of commodity transactions. And traditionally, the spot market in crypto has not been regulated by the CFTC, but there have been discussions about potentially regulating the spot market for cryptocurrency. And then we have the Office of the Controller of the Currency, which is our Treasury Department. And that's where all of our banking regulations come out. And that's where a lot of the discussion surrounding regulation of stable coins has come from. And then we have the Financial Crimes Enforcement Network, which deals with the administration of our Bank Secrecy Act to make sure cryptocurrency projects aren't facilitating the financing of terrorism, money laundering, and of course the IRS, who wants you to pay your taxes. That's not an exhaustive list, but I think it's probably the top of the pack. And then we also have the Consumer Fraud Protection Bureau, which is, what disclosures should crypto companies be making with respect to their products, and the Federal Trade Commission, and what advertising disclosures need to be made. Anyone on this call who may have watched the Super Bowl, there were lots of
Matt Damon.
Yes, there were lots of cryptocurrency companies who had ads during the Super Bowls, and you saw some pretty robust disclosures, and that was usually pursuant to what our Federal Trade Commission expects you to disclose about financial products. And then, as I mentioned, each state has certain laws. You've probably heard about investigations into various projects that, like BlockFi, had entered into a settlement and had released information that was being investigated by certain states, Celsius, about these interest-bearing products and whether those products were subject to regulation by the state securities commissions. And then we have the money transmitter laws, which govern mostly the payments industry, but the transmission, the receipt of money or some currency of value from one person and the transmission of it to another person. So we have a lot of regulators. And Michael, when you say interagency coordination, I'm not sure that's been entirely, that coordination is necessarily the word I would necessarily use, but I think under our current President Biden, he has definitely taken great pains to encourage interagency coordination, and our Treasury Secretary Janet Yellen and our OCC Comptroller Michael Hsu, there's definitely more inner workings between the various regulators I've discussed, but still not a ton of interagency guidance.
But is there like a sort of, I mean, is there a plan for like a super regulator on top, just coordinates everything around crypto and digital assets in the US?
There are ideas. There's not a holistic plan. The president's working group on cryptocurrency came out with a report a couple of months ago. I believe it was in January, that fleshed out some of the issues relating to the industry. There are some thoughts about creating a separate regulator to regulate the industry. There are thoughts about having potentially a chief regulator, potentially the CFTC, who would take more of an active view, or the OCC, who's really administering the Bank Secrecy Act, and making sure that national security isn't threatened by the use of crypto. So that's still a bit TBD. And we all read and listen to the speeches of various regulators with great interest. But I can tell you that in terms of legislation, since I was in Congress in 2018, talking to some senators and representatives from the House about the need for cohesive crypto regulation, and it's 2022.
Well, for crypto, that's like 20 years. Cool. I want to thank you, Michelle, for that. I mean, it sounds like there are, like you mentioned, alphabet soup, right? There's a lot of acronyms there in the U.S. Trying to establish a cohesive or coherent framework, and it sounds like it's still in the work, so to speak. I wanted to go back to Anna, go back to Asia, again, Hong Kong and Singapore. So now we got a lay of land of who the regulators are in those two respective places or jurisdictions. And could you talk about, again, the evolution or the change of, I would say, let's call it crypto regulations in those two places? Namely, I want to get a sense of, where the crypto regulation were, let's say, a couple of years back, and where they are now, and whether you've noticed any changes in sentiment or changes or anything like that. I like to think, somebody who works at HashKey Capital, and I think, last couple of years is really the coming out of, I think, crypto among sort of regular average participants or really with the rising of NFT, so to speak. It's a coming out party for crypto. So I think general, whether it's investors or just consumers' perception of crypto seem have changed a little bit in the last few years, I noticed. But I want to maybe, Anna, give us a summary of, again, just what is the current regulatory landscape in Hong Kong and respectively in Singapore, and whether you notice the regulatory, sentiment has changed or not from the past where they were to where we are now. So Anna, to you.
Thank you, Michael. I think that is a very important and very good questions. And then definitely it will give our audience a brief picture on what's happening about the regulators in the past. So in Hong Kong, I think Hong Kong has gone from having minimum regulations of cryptocurrencies to where the government now plans to outline this industry. Currently, there is no specific legislation aimed to restricting cryptocurrencies in Hong Kong, but the SFC regulates anyone involved in trading of cryptocurrencies that fall within the definition of securities and future contracts under the securities and future audience. Current regulatory framework for virtual asset in Hong Kong, I'll try to make it short. I think it basically covers three main categories. So first one, it regulates crypto fund management business. That is exactly what Capital is doing now. So in Hong Kong, asset management is a Type 9 regulated activity. Asset management is defined as the management of securities or real estate. Managing a fund investing only in cryptocurrencies, which are not securities, is not an asset management activities, and therefore does not require a Type 9 license. However, to a firm which is already licensed for Type 9 regulated activity, if it plans to manage a portfolio which invests in cryptocurrencies that are not securities or future contracts, it will be subject to the SFC's oversight. The SFC exercises oversight over a firm's crypto-related activities through the imposition of licensing conditions. I think the criteria is that whether the fund intends to invest 10% or more of its gross asset value in virtual assets. If no, the fund manager may need to just notify the SFC to just simply update its business plan. But if yes, then it will be subject to SFC's imposed licensing conditions and apply for an uplifting of its current Type 9 license. That's for, I think, the first type. The second one will be, I think it will regulate distributors of crypto funds. So in Hong Kong, if you want to distribute a crypto fund, you need to apply for a Type 1 license, which is dealing in securities. It is because a fund is a collective investment scheme, which is a security, regardless whether the fund invests in crypto, in virtual assets that are securities or not. In January this year, the Hong Kong MA and the SFC imposed additional requirements on the virtual asset fund distributors, including setting selling restrictions of letting them to distribute to professional investors only, and request them to maintain a proper KYC procedure and VA knowledge test, and maybe require them to conduct proper due diligence on virtual assets and ensure there's adequate disclosures to clients. So foreseeable, I think they will be subject to higher regulatory standards. And similar standards also apply to existing SFC license holders who plan to distribute traditional securities products and provide securities advisory services. Say if they want to engage in distribution of virtual asset related products, in addition to the current traditional work they are doing, then they will need to follow the imposed additional requirements as well. That will be the second type. The third one, I would say, that will be the trading platform operator. So the activities of crypto trading platform, which only provides trading services in non-security tokens, will fall outside the SFC's jurisdiction. The SFC currently adopts a opt-in approach to regulate this trading platforms. And under this framework, the platform should operate a centralized online trading platform in Hong Kong and offer trading of at least one security token on its platform. The platform operator would then fall within the jurisdiction of SFC and require a license for Type 1, which is dealing in securities, and Type 7, which is providing ATS, so automated trading system regulated activities. I think I'm also happy to share that in April, HashKey, we just obtained an approval in principle from the SFC for running a trading platform under Type 1 and 7 license. And after all conditions are satisfied and after we receiving the final approval, HashKey will become the second licensed virtual asset trading platform. I think that's basically what is happening in Hong Kong. In Singapore, I'll try to make it short. So I think the development of regulation for crypto has been, I think, steadily occurring over the last few years. Cryptocurrencies are not being treated as equivalent of money of Singapore. And depending on the characteristics of each cryptocurrency, it may be treated as regulated products such as the digital payment token, capital market products, and e-money, or else it may be treated as an unregulated digital token that is strictly used for utility purpose only. I can briefly introduce maybe two major crypto relevant regulatory regions in Singapore. The first one will be the Securities and Futures Act region. So under this region, cryptocurrencies could potentially have similar features as the conversional type of capital market products. And therefore, the conversional requirements could also apply to such cryptocurrency. And the other would be the Payment Service Act region. This region actually is quite new and has been like discussed around the community. Actually, the PSA region, it requires a person who carries on a business of providing a payment service to obtain a payment license. There are 7 payment services defined in the PSA. And I think the two related to cryptos are e-money issuance services and DPT services. Speaking of DPT services, I think, so the current scope of DPT service is quite narrow. It only includes a service of dealing in DPT or a service to facilitating the exchange of DPT. However, in I think last year, I think January 2021, amendments to this Payment Service Act have been passed in Parliament and is still pending effectiveness at the moment. I think the biggest change is that it's about expansion of the definition of DPT services. So in addition to the two I just introduced, it further added a few activities onto the regulators radar, such as the transfer of DPTs, provision of custodian wallet services for DPTs, and facilitating the exchange of DPTs without processing the money or DPTs. So foreseeable, more type of services will be included going forward, right? I think that basically explains the trend and is the general picture of what has been happening in Hong Kong and Singapore. Michael.
Thank you, Anna. Wow, there's a lot there to unpack. I think just a word to the audience, for those who are writing down notes or trying to write down notes, but maybe the signal isn't that great. We will have a replay available for this call. So for those who are really interested in the details, but couldn't write down everything, feel free to click on our, I believe it's on YouTube channel. In the Web2 world, there will be a replay available on this call. So Michelle, over to you. Again, there's similar to, I think, when I said about Asia, this is probably a big topic, but again, I'm sure the audience love to hear your thoughts just on the regulatory landscape on crypto and digital assets in the US, where they were and where they are now. And, what are some of the key insights or takeaways that you want to point out to the audience today?
Sure. So I don't think that the core regulatory landscape has changed in the US necessarily as the way that it may have changed in Asia. For the test for whether a token is a security, the courts and the SEC are still using a test that was developed in 1946. And that's what we apply. It's called the Howey test. And the case was about whether plots of orange groves were investment contracts. And that's the test that we're applying to determine whether a cryptocurrency token is a security. On the other hand, regulators like the Financial Crimes Enforcement Network have over the years since 2013 that have put out guidance and good guidance that really tells the market how to comply with the Bank Secrecy Act. First, clarifying that the Bank Secrecy Act was applicable to cryptocurrency as a medium of exchange, and then to provide additional guidance on how to apply the Bank Secrecy Act to cryptocurrency. I think what we've also seen is an increase in enforcement actions by various regulators. For example, the IRS back in, I believe it was 2016, was sending subpoenas to or requests for information to Coinbase for records to see if people who were trading crypto on that exchange were in fact paying taxes. And there was a little bit of a tussle as to whether or not the information would be provided to the IRS, and also the form of the information, because your Coinbase account, unlike potentially a brokerage account where you might get statements, we don't get statements in the mail in our Coinbase account the same way we do sometimes for a brokerage statement or even a paperless statement. So I think there's been some changes with respect to compliance with the regulations, not necessarily new regulations, and then interpretations with respect to the regulations. Perhaps, in another year, we might have a different conversation that there are, in fact, new regulations that apply to crypto. There are lots of bills have been introduced in the House and the Senate. None have been passed, but I'm cautiously optimistic that we could get some robust regulation. I know that I've spent some time with some senators and some representatives about how to craft the regulation. What's the definition? What's a good definition of a digital asset? Our staking, if you're talking about staking, our staking rewards something we tax, the transference of crypto. When is that transfer a taxable event versus a non-taxable event? So lots of ideas floating around, but I definitely think that we've not had necessarily a change to existing regulations, just an application of crypto to those older regulations and case law.
Got it. I think, thank you, Michelle, for that. I think before I proceed to my next question, I'm just going to, stir up the pot a little bit, get a little bit controversial question in there to wake up the audience if any of the audience didn't have enough morning coffee. One question to both of you. It just feels like globally speaking, there is some level of just discomfort, or some might even say distrust when it comes to crypto by the regulators. So my question to both of you is like, first of all, is that true? And if you say it is true, why do regulators, dislike or have some level of discomfort when it comes to crypto? Maybe I'll continue with Michelle and then go to Anna this time. Just a quick question, couple minutes concept. Let me know if you agree with me. I'm sure the audience would have a different view, but I just get a feeling that, again, I'm no legal expert, but there's this, guilty until proved innocent kind of saying as an old adage, but just feel like when it comes to crypto, there's something there. The regulator's like, whoa, are you doing something right? So maybe Michelle, do you feel that way? And if so, why do you think that might be the case? Yeah.
I think that's an accurate depiction of how some regulators do feel. I think if you go back to the sort of biggest story about crypto, it was, Silk Road, right? It was this massive theft and misuse of crypto that the FBI ended up, hacking this illicit organization that was, and the U.S. Attorney's Office prosecuted members of Silk Road. And I think that crypto has been associated with those bad and criminal acts. I push back on that because I push back on that in the way of the only possible way that the Silk Road criminals were caught was because the FBI learned how to analyze the blockchain, okay? And had those transactions been done in cash, and similarly, when we had the pipeline extortion, a couple of, I think it was a year ago or 2 years ago, where it was the hackers were going to shut off the pipeline if ransom wasn't paid, and they demanded payment in crypto. 3/4 of that money, of those ransom payments, were recovered because the government was able to trace the transactions through the blockchain. So you can say that crypto is used for illicit purposes, just like cash is used for illicit purposes, but you can't trace the cash because there's no ledger that shows you where the money could have gone. So I think part of it is a fundamental sort of bad press from the start of when we started hearing about it in the mainstream news. And then I think the second piece is new technology, new anything makes people uncomfortable sometimes. I remember being a junior associate at a law firm and having partners who refused to email because the email was new in 2004. And, you had
that partner is having a lot of ETH in his or her wallet.
Right. And there were people who said, well, I'm just not going to use email. I mean, it would almost be ridiculous to say I'm just not going to use email today. But for crypto, you can't touch or feel it. It's hard to understand sometimes in concept, but I don't actually know how my email gets from you to Michael. I don't need to know. I just know it does. And in a lot of respects, I tell people who are skeptics of crypto because they don't understand it, you don't need to know everything about it, and you don't need to touch or feel it. You just have to have enough understanding to have some trust in it. And some people will trust it and some people will never trust it. So I think that answered your question.
Yeah. Anna, you want to care to comment on that a little bit for a couple of minutes before we move on? Yeah.
I think, thanks, Michelle, I learned as well. So I think Michelle basically covers all the points that in my mind. I think just maybe I would like to maybe supplement one point. I think from regulators' angle, so regulators, I think they are standing in the other side, or maybe at the higher side in the industry, right? So it's not like normal like market players that they are focusing on their own business. I think regulators are more, so their action are more focusing on like so how to protect all the like residents within its jurisdictions, and then how to maybe to regulate the market players and to make sure financial stability in within that jurisdiction. And that's why I think that's basically one thing. And then why you think regulators always like distrust like any new technology, new phenomenon, and then it's always a process that they need to like learn from it, study it, and then regulate it. And yeah, I think that's the normal process, and this is something that is undeniable. So, but I think we are happy to see that in the past few years, more and more regulators in different jurisdictions, they pay much more attention into this industry. So that is to say, we're growth, right? So I think yeah, it's quite promising that one day, so this industry will be one of the mainstream. Yep.
Yeah. No, I definitely remind me. So I was in, again, traditional asset management for a number of years before jumping to digital asset management. And I just remember, there was whole debate about is hedge fund, regulated enough? There seems to be a bad perception about the word hedge fund, just saying the word hedge fund. And it was interesting when I was looking at Asia, I think, they were trying to figure out the best Chinese translation for the word hedge fund, just to give a more soothing impression. They just remind me that. Coming back to the next round of question, I think the next round of question is very specific to each of our panelists. So it's not a compare contrast kind of things. Maybe I'll start with Michelle first. Michelle, again, you work at Flexa Network, the global leader in pure digital payment. Maybe, tell us about, regulation for payment in crypto. And I think a lot of people, their first encounter to crypto is probably some sort of payment, or because I remember, that the first story of Bitcoin is always that, did you buy the pizza, right? Or when Bitcoin was introduced by Nakamoto. So maybe tell us about regulation of payment in crypto and, hey, the elephant in the room, right? Stable coins, algorithms, stable coins, what happened a couple of weeks ago? Clearly on tops of everybody's mind. My style, I don't really like comment on that topic du jour, because crypto, there's always something happening, but it feels like payment is your area of expertise. Maybe tell us a bit about the regulation of payment in crypto. Tell us what Flexa Network is doing with respect to regulation, and chat a little bit about a stablecoin. I know we can probably spend a whole day on stablecoins, but maybe give us the highlights. What's the latest, please?
Sure. So as I had mentioned earlier, we have the federal payment, the federal money transmission, or what I'll refer to as the payments laws, which are the Bank Secrecy Act, and which is administered by the Financial Crimes Enforcement Network. And the federal regime is really focused on making sure that payments are not being used to facilitate money laundering and financing terrorism. Then from the state perspective, the states are really about protecting consumers. And the state laws came from your traditional sale of checks and your remittance businesses, your MoneyGrams and your Western Unions. If Michelle lives in New Jersey and walks into Western Union in New Jersey and wants to send money to her relative in Mexico and gives Western Union $100, New Jersey cares if Western Union takes Michelle's money and actually gets it to the recipient in Mexico. So those are more consumer protection-based regulations. A lot of states do also care about anti-money laundering and know your customer, but really the states come at it from a consumer protection standpoint. And it's to make sure that the money is received by a responsible individual or entity, and that it's remitted to the location it's supposed to be remitted to. I think stable coins are really interesting because I think the big use case is in payments, right? And the popularity of, USDC and UST and all those different stable coins. Now, a lot of the stablecoin issuers are regulated by the New York Department of Financial Services, which is New York's money transmitter, among other things, regulators. And New York, as I'm sure a lot of people in Asia have heard, is not the friendliest state for crypto. But I like to say, if you can be regulated and comply with New York's laws, that's the gold standard. That's why the banks and the insurance companies are all regulated by the New York Department of Financial Services, or a lot of them are. And so the Geminis and the Coinbases and the Krakens, they're all regulated by it. And so a stable coin, generally, according to the New York Department of Financial Services, has to have, one-to-one backed reserves, whether those have to only be in cash or cash equivalents or some sort of permissible investment is a conversation for another day. But certainly I think with what happened with Terra, the expectation is not that it's an algorithmic stable coin where one asset in that algorithm, could decline and then cause the entire stable coin to lose its one-to-one peg. So I think our government is very interested in potentially a central bank digital currency. Those discussions are going on. There's been requests for comments from our Federal Reserve about what would a central bank digital currency look like, how would it be used. And again, I think that focuses a lot on payments. At Flexa, we see a lot of desire by consumers to spend their crypto in a safe manner. And I think a lot of it is in some respects generational. The ability for a consumer to say, I want to spend what I want to spend, how I want to spend it, and where I want to spend it. And I want that freedom. Just like I want to be able to open a bank account online in 3 minutes and not have to go into the bank and do it. And so we find interest from our counterparties who are merchants and saying, we're very interested in potentially using your solution, Flexa, to be able to enable that spending. And, it's great that there's no fraud and no chargebacks, on your network, and that there's guaranteed settlement and that there's flexible integration, and our customers can spend over, 99 digital currencies. And that's why we call, our platform Better Payments, because we believe we do provide better payments.
Got it. No, that's very helpful. Thanks, Michelle. Anna, the next question is specific to you. I mean, again, obviously HashKey Group is a, leading end-to-end digital asset service providers in Asia. And obviously today's topic is crypto regulations in US and in Asia. But I guess, we can't really talk about, crypto in Asia without mentioning, what's happening in China or Chinese mainland. I think there's a lot of, obviously, stories, press out there, some, I say a healthy dose of misconception as well. What is, China or Chinese mainland doing in terms of, I guess, regulation on blockchain, digital yuan, or crypto. Again, it's probably we can, again, go on for a day on that as well, but perhaps for the audience, and myself included as well, maybe you can give the audience a little bit, high level summary on, what is the current status, lay of land when it comes to crypto or blockchain regulation in China, or Chinese mainland? Yeah.
Thank you, Michael. This is really a hot topic. I've been asked so many times, especially since last September, Chinese mainland further tightening the controls on activities. I think the basic situation is that the Chinese mainland has not yet passed any special legislations on digital assets. But since 2013, the Chinese government has issued several guidelines regarding cryptocurrency businesses. I think one which I think should be very familiar with all the players. It's about an announcement on preventing risks associated with financing activities through ICOs. So this announcement was issued in September 2017. It characterized ICOs as potentially criminal activities. The crypto industry in the Chinese mainland has been hit hard since then. And in September last year, as I just mentioned, the Chinese authorities further issued a notice regarding crypto activities and further tightening controls on cryptocurrency activities. The notice stated the Chinese government's long-standing position again that cryptocurrencies are not equivalent to fiat money and cannot be circulated free in the market as currencies. So this notice also prohibits overseas crypto exchanges from serving residents in the Chinese mainland. So to conclude, currently in practice in the Chinese mainland market. So cryptocurrencies such as BTC and ETH, they are not legal tender. And the operation of exchange between fiat and cryptos or between different cryptos, crypto market making activities, providing quote for crypto transactions, ICOs, trading of crypto deliveries, and also crypto minings, extra are all banned. However, based on the crypto's commodity attributes, it is generally believed that Chinese citizens can hold and engage in virtual asset trading and investment. Of course, this should be under their own risks. That being said, I think it is difficult for individuals in Chinese mainland to buy or sell virtual assets today because financial institutions, payment institutions, and overseas crypto exchanges are restricted from providing crypto-related services to Chinese residents. And I also heard that you mentioned the digital yuan. Actually, this is kind of different. So I'll briefly touch that. So I think digital yuan is China's own digital currency. So China has been exploring that since 2014, but it is yet to launch. I think unlike cryptos like BTC or ETH, which are not centrally controlled, digital yuan would fall under the authority of the People's Bank of China. So, yeah, technology-wise, I think digital yuan will use a two-layer system where the core layer is centralized using non-blockchain technologies, and the banks will act as intermediaries in the same way they do for fiat. The digital yuan will not include blockchain, as the People's Bank of China stated that the technology is immature and there are shortfalls in performance and scalability. However, it has built-in smart contracts in order to make the digital currency programmable. And as digital yuan is China's fiat currency, I think the existing international standards and Chinese laws and regulations on AML, CFT, the administration of foreign exchange, the data and privacy protection, extra, those kind of rules shall all apply. Yes. Thanks, Michael.
Got it. Thank you. That's great. I think my takeaway is that one thing, at least my takeaway is that, I think when a lot of people talk about crypto, their first impression may be, wow, this is like the Wild Wild West, no regulation whatsoever, right? But at least one takeaway from me after today's call is that actually regulators around the world, whether it's Hong Kong, Singapore, US, or even Chinese mainland, are actually trying to be constructive about it, trying to issue guidance and regulation around this innovation. So it's actually, from what I heard, at least all the alphabet soup, is actually not, just go ahead and do it, nobody cares. But in fact, I think regulators are being proactive. Now, they could be slow, or they could be a little bit, not timely. But it does seem like regulators are trying to embrace this level of technology or an alternative asset. We're almost, we are at 1 hour, but great discussion. I do want to end on 2 more things, maybe 10 more minutes max. One, last round of questions for both panelists on sort of the future direction of regulation. And 2, we do have a few questions being sent to me by email. I do want to cover some of these questions, as much as we can. So again, maybe just to wrap up our, I guess, prepared portion. Last round of questions to both Michelle first, and then Anna. Maybe just give us a little bit of your comments on. We talk about where we were and where we are in terms of regulatory landscape for crypto. Maybe just tell us a little bit. What do you see? The direction going forward. In terms of regulation for crypto in the U.S. and then obviously in Asia. Maybe Michelle, we'll start with you first. Maybe we'll just have a couple of minutes time on that, please.
I think what you're going to see is you're going to see the states continue to act a bit faster than our federal government. A couple of weeks ago, Governor Newsom in California signed an executive order basically embracing crypto and saying California, his intention is to be, crypto friendly and to embrace innovation. And I think we've seen other states, we've seen Florida, specifically the city of Miami, really become this incredible tech hub on the East Coast, which we had financial services, hub in New York, but not necessarily what I would call a true tech hub. That was in San Francisco, Silicon Valley, then Austin kind of came to the scene, and now we're seeing a lot of movement in Miami. So I think we're gonna, Wyoming has been a very friendly jurisdiction. So I think we're gonna start to see the states develop more crypto specific and more innovative laws, because I don't think we're gonna see the federal government collectively act in a way that's gonna give us that cohesive regulation. So that's really what I see in the short term on the horizon.
Got it. And Anna, what about when it comes to Hong Kong and Singapore, sort of the future direction trend when it comes to crypto regulations?
Sure. Hong Kong has had a number of notable regulatory development in the past 12 months affecting the crypto sector. So these developments are in line with international trends and seek to move Hong Kong towards a more robust regulatory oversight framework. It is expected that the VASP region will come out. This will, I think, generally affect the whole market. As I mentioned before, the SFC currently operates a regulatory framework for virtual asset trading platform on an opt-in basis, available only to exchanges that offer trading in at least one token, which is a security. But the new VASP, Virtual Asset Service Provider, rules. So it was designed to close the existing regulatory gap and regulating like certain non-securities virtual asset service providers for the first time. And also we can foresee there will be regulations of stable coins coming out. So the Hong Kong MA issued a discussion paper in January this year on crypto assets and stable coins. It has been considering the need to capture payment-related stablecoin into its regulatory framework. This is due to the possible risks that payment-related stablecoin may pose to financial stability. Right. So while these proposals are very much in the discussion phase, it appears that regulation of stable coins is a matter of when rather than if, right? And also there's new like joint circular by HKMA and SFC issued in January this year. So it comprehensively set out the requirement that licensed companies are required to comply with when conducting virtual asset related activities. And the regulators has imposed additional investor protection measures on distribution of virtual asset products and require that intermediaries must partner with SFC licensed crypto exchanges to provide VA dealing services. So this basically what we can expect in the next 1 or 2 years in Hong Kong. Speaking of Singapore, I think Singapore is also tightening its scrutiny of the booming crypto sector. In January, this year, I think MAS has issued guidelines to limit crypto advertisement in public space and media and prohibit the promotion of DPT services to the general public. Besides, it recently passed a law, which is the Financial Services and Marketing Bill. It requires digital asset providers created in Singapore, but that conduct business overseas to be licensed and subject to local AML and CFT requirements. So this new law gives MAS the power to conduct inspections of digital asset service providers doing business overseas, and also assist the foreign regulatory authority on investigations. I think to conclude, the future for digital asset regulation is still taking shape. Hong Kong and Singapore is one of the few jurisdictions setting very clear rules and regulations for this complex sector. We could expect regulators to continue to grapple with the expansion of DeFi solutions, as well as the growth of the NFT market. Definitely more regulation would be a good thing for long-term market players like HashKey. And we have firm-wide commitment to upholding the highest compliance and regulatory standards in this digital asset economy. Thank you, Michael.
Thank you, Anna. Thank you, Michelle, very much. That concludes the talk. But again, like I said, no, the reason I was looking down because on my phone, because we do have some questions being sent over, and some of them are great questions. And I just feel like some of them might take, more than a minute to answer. But I do want to throw it out there. The panelists, if you could, quickly comment to the best of your ability within time constraint, that would be great. If not, my message to the audience that feel free to reach out to me. We could have a separate session. I love talk crypto. I'm sure the panelists here as well. So just rapid fire, a couple of questions. Most of them for Anna here, just given the audience is in Asia, but do have a question for Michelle as well. So Anna, one question from the audience is that just want to confirm all asset managers in Hong Kong, new and old, if they want to manage virtual assets, do they all require a Type 9 license, or new and old, or is it possible that if you're a new asset manager, only do virtual assets, you may not need a Type 9? So again, to the audience, not meant to be legal advice, but that's a question, Anna. I guess, do all asset managers in Hong Kong, new and old, who wants to manage virtual assets, do they require Type 9 license?
Okay, thank you, Michael. Okay, I will make it short. So if you currently don't have a Type 9 license, So if you currently do not have a Type 9 license and you would like to manage a fund that invests in like 100% of cryptocurrency, the answer is no, because as mentioned previously, so crypto does not count securities in Hong Kong under the definition of SFO. Okay, that's being said, what if you are already a Type 9 license holder say if you want to like expand your investment portfolio to touch the crypto side, and unfortunately you have to notify the SFC. And I think the difference is that so how many % of your portfolio that the gross value asset you would like to invest in this so in this new asset class? Say if it's 10% or less, I think doesn't count 10%, so just below 10%. So you will need to notify the SFC that you will do this so new asset class. That's it. I don't think SFC will do a substantial review and give you approval to do that. It's rather just an update of your business plan. However, if we are talking about 10% or more in crypto, and unfortunately, you not only need to notify them, but also you need to do a uplifting application, which SFCs like will impose additional conditions on your like your like company to see whether all the conditions like the fit and proper conditions are satisfied. Hope that clarifies. Yeah.
Yeah, got it. We did have time for 2 more questions. One for Anna and last one for Michelle. Anna, this question from the audience, I think it's a great question. I'd love to know the answer as well. The question is, what are the challenge and criteria of applying to be a licensed crypto exchange broker, MO broker, trading flat in Hong Kong and Singapore? Again, just feels like that could take days, but maybe just give a couple of highlights. What are the challenges or the criteria to be a licensed crypto exchange or broker? I know HashKey Group got one recently, and I think you led that process. So maybe just give the audience a little bit of highlight on the criteria and challenge in a couple of minutes, if you can. Yeah.
Thank you. Well, so first I need to clarify that I didn't I didn't lead that process. It's teamwork for sure. And to be honest, it took HashKey 2 years and 2 months to get the AIP. That's the AIP only. So we still are like in process of getting the full license. So yeah, I assume still maybe a few months to go. So I have to say it's really a challenging process, but also rewarding. I think it's definitely it's hard, but it's not unachievable. I think you need to get the right people here, and you need to contribute yourself into that. So I have to say that it's because that so when just in the process of the application and when we are dealing with SFC, we found that they're like learning very fast, and then they gained all the experience in this industry. So I would assume the difficulties will increase for like for the upcoming more licensing like applicant. Because for our case, most of the questions from the SFC will actually, they are based on their understanding on the business model to the first license holder. But actually the business model is a little bit different. It's quite different. And then it took us a lot of time to show them how does everything work. And we like presented like 4 to I think 5 or 6 times the demo session with them. And finally, I think it gets like a few level of approval from the regulators internal office. So yeah, I think just it's hard, of course, but it's not unachievable. Read like regulations, and then I think you'll always share some experience if you are like in the same application. Reach out to me anytime.
Sure. The principals have left some homework for the students. Read the regulation. Last question, I think is a little bit, lighten the mood a little bit for Michelle to conclude this, I think, amazing call. I'm interested in the answer to the question as well. So Michelle, the question from the audience is that currently, what are the tokens that are not considered as security tokens? Could the panelists, I'll just give it to Michelle, name a few other than BTC and ETH? Michelle, you happen to know the answer to this question?
The answer to that question, at least in the US, is only those two tokens have our regulators publicly said are not securities. Bitcoin has been declared only a commodity for quite a while. And Ethereum, the former director of one of the directors of the offices at the SEC had said Ethereum, when it was issued, was a security, but it had transmuted by becoming so decentralized that it is no longer a security. So those are the only two tokens that we have clarity on that are unequivocally not securities.
Okay, that's very clear. Great. We are 15 minutes past 10. Again, thank you very, very much to Michelle, who's based in East Coast New York, so it's a bit late. It's very late on her end. Thank you very much, and thank you very much for Anna. I think you know, it's a call about regulation, but somehow you two managed to make it interesting and engaging as well, which is no small feat on its own. So thank you very much for both. Again, thank you for the audience. We have over 130 dialed in for this. That's great. Again, my name is Michael Chen, Business Director of Business Development at HashKey Capital. Thank you again for Michelle and Anna. We will have a replay available for this call. And last but not least, I will say this again. Again, this presentation that just happened is for illustration and discussion purpose only, and is not intended to be, nor should be construed as financial, legal, tax, or investment advice, particularly any legal advice on what is not and what it is. Again, it has been really enlightening. Thank you very much, Anna. Thank you very much, Michelle, and say goodbye to all the attendees. Please continue to love the innovation part of digital assets and crypto. Okay, thanks, guys.
Thank you, Michael.
Very much.
Okay, thank you. Okay, bye.